This video is going to be about the Kohl's valuation compared to the buyout offer that Nordstrom just received not too long ago. And there's a lot of similarities into the amount of sales they both produce, the amount of profit, and all that, which you get into right here. This is both off of their fiscal year 2024 numbers that just came out. Kohl's was yesterday, and Nordstrom was in the last 2 weeks or so. So you can just compare side by side. Kohl's has a little bit more revenue, a little bit less operating earnings. Kohl's does own a lot more property, which is why they have a higher amount of depreciation and amortization. The EBITDA, which is earnings before interest, taxes, depreciation, insurance, Kohl's is higher. And then to come up with an adjusted number for that, you need to add back impairments from things like store closings. And for Kohl's, you have to deduct the finance lease payments, which aren't addressed. Like for things that are classified as a operating lease, they come out of this number up here before you get to that. But you need to deduct that to come up with a proper number for adjusted EBITDA, which is all these numbers are in millions, 1,173,000,000. And over to the Nordstrom, everything is basically very similar. But then you get to the buyout that Nordstrom was offered, $6.25 billion, for this basically the same amount of numbers that Kohl's is doing. But then you get to Kohl's market cap is now just barely over $1 billion, and the net debt, which is their debt minus cash on hand, that ends up being about 2 times the adjusted EBITDA number. And Nordstrom, what they got for a multiple was 5.4 times, which is on the lower end of what a buyout would bring, but that seems pretty fair to me. A similar number I ran out, if Kohl's got a 5.4 times adjusted EBITDA number, it would be $42.21 a share. So, and that I've done 3 different videos on different ways of valuing Kohl's at, assets, income, different ways of going about it, and they're all kind of in the mid 30s to mid 50s number. That all these things all jive with it being very, very, very undervalued currently. The other thing that I hinted to before is that Kohl's, these numbers are off of last year's annual reports because neither company has released that I could see so far their annual report. But Nordstrom over here has the total square footage that owned buildings on leased land. That would be a ground lease, owned buildings on owned land. And this includes their supply chain network, which would be warehouses and stuff like that. And this number's in thousands, so they have about 10 million square feet worth of ground leased real estate and 8.25 million square feet of owned buildings on owned land. Then you get over to, this was off of a previous video that I did on the real estate value, but Kohl's has 28 point some million square feet of owned. This is the actual retail stores, probably even higher than that, and then 17.2 million ground lease stores, and then all this, a little bit over 10 million square feet worth of distribution centers and e-commerce fulfillment centers. Kohl's owns at least $2 billion, probably even more, like maybe $3 billion more real estate than Nordstrom's. And Nordstrom they have slightly growing sales, and Kohl's sales and profits are slightly declining right now, but I think the new CEO has the right idea of giving the customer what they want, delivering more value and all that. But regardless, I think whatever way you cut it, I think that maybe even a slight haircut to the multiple that Nordstrom was offered and get something around $40 a share, maybe the upper 30s or something like that might be fair for when private equity comes around for buyouts. But I just don't see it staying anywhere near this low for any long period of time. People are going to want to buy it.